What's going on, YouTube, man? Welcome back to another video. Today I am going to be showing you guys how to become a master at trading fair value gaps. Know what I'm saying? I've been trading fair value gaps for 3 years now. Probably going on 4 years now. And I've been through a lot with fair value gaps, bro. And I figured out how to trade fair value gaps the right way, kind of on my own. I did learn from ICT, but I didn't really learn how to trade fair value gaps until I stopped watching the content and I went in my own charts and I started trading on my own. And then I was losing. And then finally figured out how to trade fair value gaps. And ever since then, those 2 years ago, bro, I became not a master, but pretty damn good at trading fair value gaps. So now I'm saying I'm gonna be teaching y'all guys that today. So make sure you like the video, subscribe to the channel, and we about to get right into the video. Now I'm saying, so let's get it. All right. So as y'all can see right here, we got the 1 minute chart, and when you are trading fair value gaps, or when you are trading anything, hold on real quick. When you're trading anything, you should have a narrative on why you're trading that specific, thing. Why you're going to that target, why you're taking your entry there, why your stop loss there. You should have all of that should be based on a narrative. A narrative is you should have reasoning for the trades that you're taking, bro. You shouldn't just be taking trades because you see a fair value gap. You should see a fair value gap and be like, okay, I seen price did this. Okay, we did that. I see that we could possibly go here. We formed a fair value gap here. All right, let me take that trade. You know what I'm saying? So that's what I'm going to be showing you guys today, right? So if you see on this 1 minute chart right here, we are going to be zeroing in on this price action right here from 8:30 all the way to this price swing right here. Boom. 8:30. What the freak? All right, 8:30 all the way into 10:30. Okay, 8:30 to 10:30 is what we're going to be focusing on for this. And what I want you guys to notice is before this price went higher, because we're going to be focusing in on this price swing, we're going to be focusing on the buy program that happened and the fair value gaps and the PD arrays that was forming inside of this range. Now I'm saying, but I want you to pay attention. Before that buy program happened, with all of my trades, this is what I was talking about the narrative. Before that happened, we had a big run down, running lower, which is your manipulation. Know what I'm saying? And that big run down lower wasn't just random. This is what we did. If you go down to right here, okay, if you look at this run down here, right, I was bullish on this day, and this day on a daily chart was this day right here. That was Tuesday. So there was this day right here, right after that black candle, that down candle, that next up candle. It was Tuesday, right? And I'm bullish on the daily chart because I want to see price get to this buy side before all this happened, before we already reached the buy side. Okay. So we ran down, we took out sell side, and then we ran down into equilibrium or a discount of this range. If you measure the range from high to low, we ran down into a discount below 50% inside of this fair value gap, and we got some expansion. Okay, so that's your narrative on the like the higher time frame, like a 5-15 minute chart. Okay, so after you see that, after you see this manipulation coming down here, so I have a bullish bias at 9:15, we have a run higher, and then at 9:30 we have a run lower, taking out these lows, taking out a short-term low, and then we have a nice displacement candle going higher. And all of this price action here happened before 9:30. I don't trade before 9:30, so it's easy for me not to get caught up inside of this manipulation because I wasn't trading yet. I don't start trading until 9:30, and this where we was at 9:30 right here. So I see us did this. Boom, we took out the short term low. We traded higher. We left a fair value gap right here, and boom, price traded back inside the fair value gap. I'm gonna delete this rectangle now. I'm gonna zoom in a little bit. Price traded inside the fair value gap. It then traded higher. Now this is where it get good at, because this is the whole point of this video. This is your entry right here. I didn't take an entry at this fair value gap, but I was going to take an entry at this fair value gap. Actually, something stupid happened during my trading. I was logged in. I was on NQ instead of the micro, so I had to go back. And by the time I got on the micro, we already started trading higher, so I didn't take that trade. You know what I'm saying? So that's your setup, and you wouldn't think like, how would you know? How would you be comfortable with trading at fair value gap, bro? Experience, bro. You gotta come in these charts, bro, and you gotta work on these setups. Now I'm saying the narrative is we're bullish. We have a bullish, not the narrative. Our bias is bullish. The narrative is we came down and took off sell side and ran into equilibrium of that range. And then we got displacement ahead of 930. 930 came, took out short-term lows, and we got some more displacement. Once you see that displacement, you can obviously see that we're not wanting to go any lower than what we already did after taking off that sell side. So now all we have is PDA range. We have a fair value gap. If you don't trade that fair value gap, okay, cool. Wait. It's still 9:45 macro time, so it's like you still got time. It's not even 9:50 to 10:10 macro yet. So boom, we trade higher. We trade higher, and what do we leave? More fair value gaps, right? And these are the fair value gaps that you trade down here. I'm gonna keep them marked up. These are the ones that you trade, and I'll tell you why. Because we haven't reached our target yet. If we ran sell side on the higher time frames and ran into a discount of a range, we're going to seek some buy side. If you look at this chart, where is the buy side at? Okay, we have buy side right here at this high. Boom. We have buy side here at these highs. Boom. And this is not hindsight, y'all. I traded this day, and I took this fair value gap. And you got this high right here that you could have targeted. Actually, I targeted this high. I didn't even target this one. So price created these fair value gaps. You got a fair value gap right here. You got another one inside of here. You allow, when you have two fair value gaps back to back, you allow it to trade into the second one. So your stop loss should be under the fair value gap low of this second fair value gap. And then at 10 o'clock, which is the reversal time, which we didn't grab the buy side. So at 10 o'clock, I'm expecting 10 o'clock to hold these fair value gaps. So at 10 o'clock, we ran down into the fair value gaps. You could have entered in this one or this one. If you didn't get inside this one, we traded higher. We left a fair value gap right here, but we didn't trade into it. But also, if you look at this, bro, there's all types of setups in these price runs. Now this video is specifically, one second. This video is specifically about fair value gaps, but something that I do sometimes is, boom, so we got a breaker, we got low, high, then we got a break, and then we got a break higher. So we got a breaker, and we left a fair value gap in here. Now we didn't trade back into this fair value gaps, but if you don't get inside of these fair value gaps and you were scared, and we still have this buy side remaining, bro, if we create a fair value gap, you better get in. Get the fuck in the trade, bro. You know what I'm saying? Sometimes I don't even let it trade into the fair value gaps. Once we create it, I get in. But that's just because I have experience trading it. You know what I'm saying? So to answer your question with this video, the fair value gaps that you trade is the fair value gaps after the manipulation, and the fair value gaps that occur before we run the buy side targets. So some of you guys, what you would do is you would trade this fair value gap, right? So you would see this whole price run go higher, higher, take out this high, come back down into this fair value gap, run higher, higher, take out these highs to the left. And then you would be like, oh damn, I just missed the trade. Let me get in a trade. And you would trade the highest fair value gap inside the range, bro. And then you would get a retracement. And then you would lose. And then you would think it's the fair value gap fault. Like, no, bro. You're trading the wrong fair value gaps. The last thing you want to do is trade a fair value gap after we already ran the liquidity, bro. Like, if we already took out these highs, bro, you don't want to trade the fair value gap that brought us up to the high. If you missed out this move, you will have to wait till another time macro, 10:30, 11 o'clock, you know what I'm saying? Shit like that. But, yeah, bro. After the buy side is taken, fair value gaps is not high probability anymore. You want to get them early. And don't be scared. You got to go in your chart and you got to journal these things, forward test with these things. And I promise you, bro, after a period of time of you doing it, you're going to start seeing these setups like the back of your hand, bro. I see these setups like the back of my hand. I can't unsee them, bro. Like, I literally can't. I will see it occur every single time. But that was it for this day. I'm gonna go on to the next day. We're gonna do one more day, and this is the day we're gonna do right here, right? And what I like about these is it's the same criteria. So like when I teach these, it's easy because it's like I trade order flow, bro, and this is order flow. Before I say this to my students, bro, before you buy, if you want to see price go higher, you want to see price go lower and manipulate first. Before you see, if you want to see price go lower, you want to see price go higher and manipulate the buy side first. You know what I'm saying? So in this case, we got this big run down, right? Run down. Boom, 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 boom. Okay? And then we have high impact news at 10 o'clock on this day as well. So if you would see the big run down, you would ask, okay, what sell side did we take running down? We took out one low, two lows, three lows. And you would say, like, how did you know that we were going to go back higher? Well, we took out all these lows and then we ran back into this inefficiency, which was the daily fair value gap right here. So, boom. We ran inside a daily fair value gap, and also new week opening gap was down here as well. I just don't got it marked up on this chart. So he ran down into the daily fair value gap. Let me go back to the chart. So after taking out all these lows, taking out all the lows, boom, on the left that we don't see right now, we ran inside a daily fair value gap too. And then at 10 o'clock, we had high impact news. So usually if we have high impact news at 10 o'clock, you will want to wait to 10 o'clock, or you will want to, depending on your experience, bro, it's all experience. Like sometimes you would trade before 10 o'clock, even if we have news. But if I'm bullish and we're going lower, taking out lows, then that's not what I want to see for 10 o'clock. I want to see 10 o'clock reverse if I'm bullish and we're taking out lows. I want to see us take out highs. So if we're taking out lows, then I obviously want to see us reverse, which is 10 o'clock reversal time. So at 10 o'clock, we got a fair value gap higher, and then we inverted this fair value gap. While inverting this fair value gap, taking out this short-term high, we created our own buy-side fair value gap right here too. I'm going to delete that daily fair value gap. So we created a buy-side fair value gap down here. I bought it, I longed this fair value gap, and so boom, we traded into it. We stayed in the upper half, which is very, very nice. That tells us that price is very bullish. We traded higher. we have another fair value gap. None of these fair value gaps is better than the other, bro. They're all entries. Why? Because the price went to go run sell side, they're gonna go run buy side. Where's the buy side? Well, obviously not this short-term high right here, but it would be these relative equal highs up here. So your buy side is up here. So every fair value gap before you get up to this high, take it. You know what I'm saying? Unless it's one all the way up here, obviously not. Like you just missed the whole move. But if we are in, so if you measure the range that we're trying to take the buy side from, the best buy side fair value gaps is going to be in close proximity to 50%. So these ones for sure. Also, this one too. This one as well. Even though it's above 50%, you can still take that fair value gap. But these are the high probability fair value gaps for sure. But we've traded into this fair value gap. You see price stays above 50%. Again, we trade higher. Price creates another fair value gap. Again, bro, all these entries, bro. You're just watching the trade just going without you. You didn't take the trade. Price traded into another fair value gap. Trade higher, take out this high. Guess what? Price creates another fair value gap. You're just watching the trade just leave you. Trade into another fair value gap. Trade higher into the buy side. So price created 1, 2, 3, 4 fair value gaps before we hit that buy side, bro. There's no reason. Wait. Yeah. There's no reason why there's a problem trading fair value gaps, bro. Like, all. No, I ain't gonna say like it is a little. It take some time to get good at, but those are the high probability fair value gaps that you trade. The ones that happen right after manipulation that's in line with your bias. If you have a bullish bias and we go take out sell side in the morning at 8:30 or 9:30, and then we reverse and create a fair value gap to go higher and take out the buy side, then trust that fair value gap. Don't take it. Trust it, bro. Trusting it is more than just taking a setup. Trusting in me, I'm gonna take this setup and I'm gonna let it run to my target and I'm gonna make some money off of it. That's trusting the setup. You know what I'm saying? So that is how you master fair value gaps, bro. Taking the ones that's in the price run, bro. Order flow. You know what I'm saying? Before we run the liquidity and not after. Don't take this fair value gap right here after we took the sales. I took the buy side and you finally buy this fair value gap right here and then you get fucking stopped out. Like, duh. You know what I'm saying? But yeah, bro. That's gonna be it for this video. Hold on, I'll show you guys one more trick. If you came this far from this video and you don't trade fair value gaps, and you want to learn how to trade for value gaps, or you trade for value gaps already and you're not that good, this is also some sauce for you right here, bro. I got you. Got you, brother. All right. Fair value gaps, right? When you have a price run from high all the way to low, if you measure the range, price will run up into the fair value gap right above 50% and hold that fair value gap and continue to run the sell side. So in this case, the fair value gap that's above 50% of this range is, oh shit, it's not this one. It's this range right here. I'm taking. And the reason why I would use this high instead of this high is because I'm using this price swing. I'm not using this price swing right here because this is a balanced price range. I'm using this unbalanced price swing right here. Okay? So we have this fair value gap that's above 50%, and we also have this one too. And the reason why I'm going to use both of these is because, like I said them earlier in my video, if you have two fair value gaps right on top of each other, you allow it to trade into the second one because it can trade into the second one. So you allow it to do that. So these two fair value gaps right here would be the ones that you would look for, and then you would not allow it to trade into this third one. You know what I'm saying? It shouldn't trade into that third one. And you will see right here that we literally stopped before we got to this third fair value gap, and we respected the high end of that fair value gap candle. Again, not hindsight, bro. I will show you my executions, but I honestly don't even feel like logging into my account. But yeah, bro, measure the range, the fair value gap when you're going short, and a premium above 50%, and vice versa if you're going long. If you measure the range, the fair value gaps that's under 50% and a discount, those are the ones that you buy to go long. I think I said that wrong. If you're going short, fair value gaps above 50% and a premium you use to go short. Know what I'm saying? Boom. Alright, so that's it for this video. If you like the video, subscribe to the channel, you know what I'm saying? And I'm gonna be posting some more videos this weekend, so stay on the lookout for that. And I'm gonna see y'all boys in the next one. Yep.